Countries with the lowest income tax rate. Imagine living in a country where there is no income tax or incredibly low. You're probably thinking it is a dream and need someone to bring you to reality. No, it's not. These are countries out there that are having an amazing tax system that let you pay very little or nothing in terms of income tax. They exist to make up for the low tax rate system. They make their money via tourism, exports, among others. You might be thinking it would be wonderful and you should just move there. However, it's not the case as they impose very strict, expensive criteria for residency. Some are quite long, they could take up to a decade. However, it is worth it. Join us today as we look at 10 countries that have the lowest income tax rates. Before we begin, please subscribe to our channel, turn on the notification bell to get alert when we release new content. Monaco has become the world renowned as one of the best tax-free states for the mega wealth to move to. Monaco is a beautiful and wealthy city-state located on the Mediterranean coast of the French Riviera. It is also one of the handful countries that charges its residency and citizens zero tax whatsoever. Acquiring residency and citizenship in Monaco is relatively simple but extremely costly. You will need at least few millions of dollars to prove significant wealth to acquire permanent residency. If Monaco sounds like an ideal place to you, you will be enjoying an elite group of wealth experts living a tax-free luxury life. Number 2, Kuwait. Kuwait makes its place second on our list with zero income tax. There are also no excise, property or transfer taxes. For Kuwait, the employer's contribution is 11.5% and the employee's 8% of monthly salaries. Benefits provided includes pension on retirement and allowance for disability, sickness, and death. In addition to the above contributions, the employee must contribute 2.5% of their monthly salary per month under the Social Security law. Number 3, Bermuda. Bermuda is an even more attractive Caribbean income tax-free destination. However, it is also a much more expensive country in which to live. Its relatively isolated locations makes Bermuda one of the most expensive cost of living spots in Western world. Bermuda is much more developed than most Caribbean islands with excellent roads and public transportation. And beyond that, from its famous pink sand beaches to its upscale restaurants, Bermuda is considered one of the most scenic and pleasant countries in the Caribbean. Bermuda is considered as one of the most scenic and pleasant countries in the Caribbean. The majority of U.S. expats living in Bermuda are employed in the extensive financial sector that exists in the country. Number 4, Bahrain. There is no personal income tax regime in Bahrain. However, individuals employed by a natural person or a legal entity or an enterprise in the Kingdom of Bahrain are subject to a contribution of social insurance organization rules in Bahrain. Capital gains and income of residents or non-residents not paid in Bahrain are not subject to tax or social insurance rules in Bahrain. However, Bahrain has a tax rate of 5% which applies to most goods and services, with several exceptions where certain goods and services may be subject to zero rates or be exempted from VAT. Number 5, UAE. There is several oil companies in the Middle East that have no income tax. The UAE has a thriving economy and have a more multicultural environment than the majority of countries in the Middle East. This translates into excellent dining and entertainment options. There are also very good educational facilities available and a strong English-speaking populace. Number 6, Qatar. Qatar operates as a territorial taxation system, which means an individual is taxable to Qatar if one has generated qualifying Qatar source income. Regardless of one's tax residence, income tax is not imposed or employed on the individual's salaries, wages, and allowance. A self-employed individual may be subject to income tax if one derives qualifying income from source in Qatar. Qatar also has no property tax, but resident is expected to pay a fee to social insurance in respect to Qatar's employees. Number 7, Cayman Island. The Cayman Island is another Caribbean island nation with no tax. They make plenty of revenue through their tourism and offshore finance sector. Cayman Island is one of the more upper market Caribbean nations. The cost of living are on the higher end. You will need to invest a substantial amount to maintain long-term residency. However, this might be a worthwhile option for wealthier investors who would prefer to stay somewhere which offers a first-class lifestyle in a developed nation. Cayman Island are not as well known for offering citizenship by investment, but they do generally allow permanent residency for those making over $100,000 per year and investing sizable amounts in real estate or local businesses. It is therefore a viable option to consider. Number 8. Bahamas. It is one of the most popular tourist destinations in the world, and as you might imagine, it is also pretty great to live. It is extremely easy to obtain an annually renewable temporary residence permit in the Bahamas for $1,000. You will need to invest at least $250,000 in real estate to establish a permanent residence, though, which allows you to become a tax resident and therefore eliminates your income tax in the long run. The Bahamas also doesn't have a citizenship by investment program to speak of as yet. The substantial amount of money you will need to maintain permanent residency could be worth it if those wanting to escape to one of the world's favorite beaches, paradise, and tax heavens. Number 9. St. Kitts and Nevis. St. Kitts and Nevis is another recommended option for foreigners looking for a place with no tax on income. Although a resident company in St. Kitts and Nevis is taxed on worldwide income, that is, corporate tax rate is 33%, and non-resident company is not subject to any tax for all income derived outside the country. There is no personal income tax and no withholding tax on dividend payment to residents in St. Kitts and Nevis. If dividends, interest, or royalties are paid to non-residents, regardless of the company or individual, a withholding tax of 15% shall be charged. Number 10. Andorra. Located in the Pyrenees Mountains between France and Spain, Andorra imposes a scalable tax rate capped at 10% for individuals making €40,000 each year. Andorra's mountain location make it a scenic spot for skiers and mountain climbers. Other than skiing tourists, life in Andorra is relatively quiet and easygoing. Andorra is renowned for not only its low tax rates, but also for being with a value-added tax system, bringing more Europeans driving in from the day to purchase cigarettes, liquor, apparel, or electronics. In keeping with tax-friendly attitude, Andorra is noted for having one of the most well-developed offshore banking industries in the world. The path of Andorra's citizenship is one of the lengthiest, with naturalization taking more than 10 years. Thanks for watching. Be sure to like the video and subscribe to our channel and turn on the notification for more. Your ideas and contributions are welcomed in the comment section.